We are going to solve the May 2026 accounting paper for CA Foundation. Like any other CA exam paper, our institute has two missiles with them. One, the missile of toughness. Two, the missile of a lengthy paper. This exam, they use the missile of a lengthy paper. Remember, accounting is the first exam, so they will either rattle you with their toughness or make you anxious with their length. This paper was a lengthy paper, but very possible paper. For those students who kept their cool, getting 60, 70, 80 was not a problem. But let's look at the paper in detail. The very first question is always true or false. For the recent past exams, we have seen this pattern. And this is important, not only that it is compulsory, but it is a huge time saver. So therefore, we have to get used to true or false. Look at the first question. The cost of inventories should comprise of all cost of purchase. A very tricky question. When you say cost of inventories, it is not just cost of purchase, it is also incidental expenses along with the purchase. Therefore, this statement is false because cost of inventories includes the cost of purchase, the cost of conversion, and the cost of bringing the goods to the present location and condition. Therefore, false. The second question. According to the decision of Ghana versus Murray, the loss due to insolvency of a partner has to be borne by the solvent partners in their profit-sharing ratio. The entire statement was right until the last part in their profit-sharing ratio false. It should be in the capital ratio just before dissolution. Ghana versus Murray, the loss should be borne by the solvent partners in their capital ratio just before dissolution. That's why it is false. Now let's look at the third question. The amount spent on demolition of an old building which was necessary for the construction of a new factory building on the same site is revenue expenditure. Again, the last part is out. It should be capital expenditure. Any expense incurred as incidental to the acquisition or construction of an asset is a capital expenditure and not a revenue expenditure. So this again is false. The next question says about as per section 39 of the Companies Act, 39 ko maro goli. In case of issue of shares, the application money must be at least 25% of the issue price of shares. This is not a Company Act rule. This is false. The Companies Act says it should be at least 5% of the nominal value of the shares. Then where is this 25% of the issue price coming from? That is a SEBI regulation. So I'm afraid that this also was false. All the four so far false. 5. Adjustments in the form of an additional information shall be adjusted in the final accounts of an NPO only in one place. The rules of accounting, whether it is an NPO or not an NPO, is still double entry. It has to come in two places. Therefore, this again is false. What will you write? Statement being false, highlight the false and say any adjustment in the form of an additional information requires a recording of a transaction under double entry, so it will affect two places and not just one place. Let's go to the sixth one, the last one, a simple one. The cash book is a subsidiary book? Yes. As well as a principal book? Yes. Why? Because it performs not only as a book of original entry, but also a ledger. So, one statement is true. So, this was your first question of 12 important marks. You couldn't go wrong in this, isn't it? Let's go to the next question. A very technical question which came as define accounting policies. Name the major characteristics which should be considered for the purpose of selection and application of accounting policies. also state the conditions in which a change in accounting policies should be made. Let's go to the definition part first. The definition part I've given it is nothing but specific accounting principles. It says specific accounting principles and the method of applying those principles becomes a policy. We are having a policy of charging depreciation by using the written down value method. It's a depreciation policy. Okay. So what are the characteristics that should be followed while applying a policy? I tell my students that what is the method of selecting a policy? MSP. Materiality, substance over form, and prudence. That's all. What are the situations under which an accounting policy can be changed? 3 situations. 1, there is a legal obligation. The law got changed, we have to change. 2, accounting standards got changed. Then we have to change for complying with the accounting standards. 3, we can make a better financial representation of the statements. Then we make the change. 3 changes. Change in law, change in accounting standard, and for better representation of financial information. We go to the C part. C part was an absolute bonus. They wanted you to prepare a sales returns book. Mrs. Modern Stores during the month of March 26, as per their waste book, you are required to prepare the returns outward book. Okay, purchase return book. Waste book matlab scrap book. Okay, don't get worried about the names. Where do you record it? You prepare a subsidiary book called returns outward book. The first question was a return. The second question also is a return. But the third transaction is not a return. Okay, not purchase return. It is good, that is capital equipment that is returned. So it won't come in my books, but the other 3 transactions will appear in the book, and I have prepared a solution here for you. It would be like this. Particulars, details, debit note number, invoice number, LF, amount, and that's it. Okay, simple. The second question, the A part. The second question has got 2 parts. A part was a depreciation question. Okay? Machinery was bought for 60 lakhs. October 1, after 2 years, a part of the machinery of the cost of 4 lakhs was auctioned for 225. On the same date, new machine for 7 lakh 50 with an installation charge of 40 was bought. October 1st, after 2 years. The company has adopted depreciation of WDV method at 10%. Prepare machinery account, provision for depreciation, and machinery disposal. Calculating depreciation to the nearest rupee. Now, let's start with the machinery account. 23rd. Now, when you have a provision for depreciation account, what we have to do? We have to record the machinery account on cost basis. So, the first year, 2 bank account, by balance carried down. Second year, 2 balance brought down, by balance carried down. Third year is where the changes happened. On April 1, 2025, 2 balance brought down 60 lakh. By machinery disposal, 4 lakh. The cost of machine worth 4 lakh was auctioned. So that goes on the credit side. On the same day, 2 bank, you bought a new machine, 7 lakh 50 plus 40,000 installation. Therefore, the balance is 6390 on a cost basis. Then we talk about provision for depreciation. Okay. First year, by depreciation on the 60 lakh at 10%, 6 lakh. By balance brought down 6 lakh. By depreciation for the second year, 60 minus 6, 54 lakhs into 10%, 5 lakh 40. 2 balance carried down, 11 lakh 40. Third year, by balance brought down, 11 lakh 40. And the accumulated depreciation on the assets sold is debited to the machinery disposal account. the accumulated depreciation till the date of sale is debited to the provision. That part of the provision is no longer required. How did I get 92,200? For 4 lakh, first year 40,000, second year 36,000, 76,000. Third year 3 lakh 60 minus 36 is 324, half is 16,200. When you add up all that, 40,000 plus 36 plus 16,200, you will get 92,200. Okay? Then current year's depreciation, I have shown a working note there, balance carried down. The third account they wanted is a machinery disposal account, where the cost of the machine comes from the machinery account 4 lakh. By provision for depreciation, 92,200 comes from here. Right? When you see here, from here, we are crediting. Okay? 92,200. Then the sale price of 225, therefore the balance loss is 82,800. Now how could you make a calculation for this? A simple calculation that needs to be shown. Okay. Now this 56 and 4 is the part of the first machine. Machine 1 unsold, machine 1 sold. Doing the calculation separately. The depreciation 5 lakh 60 and 40,000, therefore 6 lakhs entirely for the first year. Second year, 5 lakh 4,000 and 36, so 5 lakh 40,000. Then the third year, the brought down value is 45 lakh 36,000. Here it is 3 lakh 24. We charge depreciation for 6 months. So the book value is 307,800 after the depreciation for 6 months. Now that 3,07,800 is compared with 225. Therefore, I get a loss of 82,800. As far as the continuing machines are concerned, 45,36,000 I will charge 4,53,600. The new machine 7,90,000 I have charged depreciation for 6 months. That is why it is 39,500, and therefore the balance. So you prepare these notes. Now, is my balance correct? I will double check. Machinery account after the balance, opening balance, the closing balance of machinery account was 63,90. The closing balance of provision for depreciation is 15,57,100. So I have double checked this one also. Okay, this is correct. Okay. So this was a simple question on machinery, not complicated, takes time, you have to be cool while doing it, you will get the full marks. The 2B part came from rectification. Always compulsory question like this, okay? Because every time they ask. So what was the question? The accountant of Angad Traders agreed, unable to agree the trial balance and transferred the difference to a suspense account. On the examination of the books of accounts, you observe that the accountant had committed the following errors. So it is in the same year, you have to use suspense account. Okay? We'll start with the first transaction. Goods of the value of 15,000 returned by Mr. Arora were entered in the sales day book and posted therefore to the credit office account. What should have been done? I should have debited sales returns and credited Arora. What was done? It was credited to sales. When they entered in the sales day book, they recorded credited sales, they credited Arora. So how do you rectify? We give the right debit to sales returns and remove the wrong credit given to sales. Therefore, the rectification is sales returns account debtor to sales account debtor to suspense account. Okay? A wrong credit went to sales account, that has been debited. The right debit needs to be given to sales returns account, that also has been debited. The credit goes to suspense account. The next transaction, an amount of 3,000 entered in the sales returns book has been posted to the debtor Mr. Radhe, who has returned the goods. When a customer returns goods, you credit the giver, no? But you debited it. So you give a credit of 3,000 first for cancelling the wrong debit giver and give the right credit of 3,000. Therefore, the rectification would be suspense account debtor to Radhe's account. Okay? The third, wages of 4,600 paid to workmen for making furniture charged to wages. Common mistake. The wrong debit went to wages. Remove the wrong debit of wages. Credit wages account. Debit the furniture account. Okay? A check of 12,000 received from Janak Enterprises has been dishonored and was passed to the debit of allowances account. When a customer dishonors a check, you debit the customer, not allowances, isn't it? So customer's account has to be debited. The wrong debit to allowance is removed by giving a credit to allowances account. Therefore, Janak Enterprises account debtor to allowances account. Okay? Goods amounting to 1,600 had been returned by a customer JV Corporation and were taken into inventory, but no entry in respect of this was made. A total omission of the sales returns. So, sales returns account debtor to JV Corporation. Simple entry. Okay? The sixth one. A second-hand motor car was purchased for 30,000 on 1st October 25 and debited to car maintenance. Angad Traders charges depreciation at 15% on the written down value of the vehicles. So on 30,000 at 15% for 6 months is 2250. Therefore, car account debtor 27,750, depreciation account debtor 2250, to car maintenance, the wrong debit given to car maintenance is removed by crediting car maintenance with 30,000. Okay? Good. 7. 31st March, old furniture was sold for 16,000 has been entered in the sales book. The total of which has been posted to sales account. So the credit to sales account is wrong. The credit should have gone to furniture account. Therefore, sales account debtor to furniture account. Okay? Sales account debtor to furniture account. 8th. An amount of 8880 due from Hemal, which had been written off as bad debt in a previous year, was unexpectedly recovered and had been posted to the personal account of Hetal. The credit to Hetal is wrong. You debit Hetal's account to remove the wrong credit and credit bad debts recovered account. Therefore, rectification. Hetal's account debtor to bad debts recovered account. Right? 9th. The discount allowed column in the cash book amount of 2,500 was not posted. You didn't do the posting. A one-sided error, you post it. You say discount allowed account debtor to suspense account. Simple. 10th. A sum of 3,500 paid towards mediclaim expenses of the proprietor was charged to employee benefit expense. A personal expense of the proprietor cannot be taken as a business expense. That is your business entity concept. So, remove the wrong debit given to employee benefit expenses and personal expense should go to drawings account. Therefore, drawings account debtor to employee benefit expenses account. And I have shown the errors with their narrations. This will be given to you as a PDF on request. Okay. The third question, the first 10 marks was all about admission. There are two partners X and Y. Z is admitted. They were sharing profits in proportion of 2:1. Balance sheet is given. On 1st April 2026, they decide to admit Z as a partner for a 5th share in the future profit and losses. He would bring in 60,000 towards capital, 18,000 towards goodwill. Goodwill will not appear in the books. The new profit sharing ratio is 8:4:5. Okay? Old was 2:1. Now it is 8:4:5. Okay? If you note, 8:4:3. So 2:1 is the same as 8:4. So in between them, there is no change in the profit sharing proportion. So the old profit sharing ratio is equal to the sacrifice ratio in this question. It was decided to revalue the assets, land and building 1,75,000. 1,40,000 became 1,75,000. So this is a plus 35. Plant and machinery 60 became 50. This is a minus 10. Inventories 28 became 25. This is a minus 3. Trade payables no longer payable. This is a plus 1200. And the provision of doubtful debts which we created at 5% on debtors, this would be minus 2200. Then the outstanding liability in the books was 1800. It was settled at 1500. So there is a plus of 300. This is the revaluation account requirement. So when I prepare the revaluation account, all the pluses on the credit side, buy buildings 35,000, buy trade payables 1200, buy outstanding liability 300. Okay? So, and on the debit side, the depreciation on plant and machinery, the write-off for inventories and the provision for doubtful debts, there is a balance of 21,300. It should be borne or shared by the old partners in their old profit sharing ratio of 2:1. A simple revaluation account. Then, sacrifice ratio, old ratio is 2:1. Okay, 2:1. Now it is 8:4. So it is the same, which is 2:1. Okay. The calculation of capital after addition. Z's capital for a 3/15 share is 60,000. Therefore, excess capital will be 60,000 into 8/3, which is 1,60,000. Y's capital will be 60,000 into 4/3, which is 80,000. Then I opened the capital accounts. My balance brought down 1,80,000 from the balance sheet. There is a P&L account balance there, undistributed profits of the old partners. In 2:1, I have shared it as 16 and 8. Outstanding liability which was borne by Y is credited to him 1,500. Revaluation profits 14,200 and 7,100 from here. This one. Okay? In there. He brings in cash as capital. Z brings in 60,000 cash as capital. Goodwill to be given to the old partners in their profit sharing ratio, 18,000 into 2:1. Profit sharing ratio means because it is the same as the new ratio, 8:4. Okay. And the closing capital be calculated. So, Y has a current account debit balance, but X will have Y has a credit balance and X will have a debit balance. That is the balancing figure. This is the balancing figure. Okay. So the balance sheet after admissions, land and building become 1,75,000, plant and machinery become 50,000, stock becomes 25,000, debtors 44 minus 2,200, cash at bank 18 was the balance, 60 was the capital brought in, 18 was brought in towards goodwill, total 96,000. We have excess current account debit balance. On the liability side, the capitals are agreed as 160, 80 and 60. They maintain that. Y's current account has a credit balance. Bank overdraft no change. And trade payables are reduced by 1,200, therefore 23,000. The balance should be easily tied. Kept it cool, you would have got it. So keeping cool is very important inside the examination hall. Let's move on to the next 3B. This was an incomplete record question. Opening balances are all given clearly. Closing debtors is not given. Closing bank balance is not given. And the capital account at the end is not given. Details are given about the transactions during the year. Additional information, no cash transaction. So only bank transactions in this entire question. Okay. Goods are sold at 20% profit on sale and the cost of goods is 3,60,000. 20% on sale is 25% on cost. So 3,60,000 cut 25%, 90,000 is your gross profit. Sale will be 4,50,000. And then expenses include 7,500 which was paid on 1st January. Insurance policy is effective from the date of payment. Annual payment, 1 year payment. That means 3 months is for this year, 9 months is prepaid. Okay. Discount allowed, discount received is given. So when I prepare the trading and profit and loss account, opening inventory and closing inventory are given to me. Purchases is the balancing figure because sales I know 3,60,000 plus 90,000, 4,50,000. Gross profit is 90,000. So the balancing figure is 3,70,000 for purchases. The gross profit brought down 90,000. Discount received 1,725. Expenses less 9 months of 7,500 which is prepaid. So 63,625. Discount allowed. The loss on sale of furniture, 20,000 worth furniture was sold for 16. So 4,000. And depreciation on furniture, I've got a working note for this. Net profit is the balancing figure. In the balance sheet, the bank balance, I've got a working note for this also. Trade debtors, I have a working note for this also. Inventories, furniture and prepaid expenses. Trade creditors, capital, opening balance, add profit, add additional capital, less drawings. Drawings is 2,000 per month. So 2,000 into 12, 24,000. What about closing debtors? Opening balance was given to me. Sales is given to me. Cash received is given. Discount allowed is given. So the balancing figure is 48,000. That's how I got my closing debtors. What about bank balance? I prepared a bank summary. Opening balance is given. Collection from debtors is given. Additional capital introduced is given. And sale of furniture is given. There, payments to creditors, expenses paid, drawings 2,000 per month, furniture bought, and therefore balancing figure is the closing balance of bank. Okay. Now, how did I get the depreciation on furniture is the question. Okay. See, if I open the furniture account, what is given to me as far as furniture is concerned? The balance was 58,000. Okay. Furniture. The balance was 58,000. So if I debit the furniture account, debit is 58 for furniture. Then we are told furniture was sold for 16. But there is a loss of 4. And we have bought furniture worth 18. And the closing balance is given as 47,500. Therefore, the balancing figure is depreciation. Okay. This balancing figure, which is 16,000 plus 4,000 plus 47,500 minus 76 is my depreciation. This is depreciation. That's how I get my depreciation on furniture. Okay. Again, very simple question for full 10 marks. Lot of time will be taken on this. You have to be careful. Okay. So the key is you keep writing whatever you know and leave it blank. If you do not know the figure, you hear it later on. The things will fall in place at the end. Everything falls in place at the end. There is one more question which came from partnership. Question number 4A came from death of a partner. 3 partners, 3:2:1. 6,50,000 is their balance sheet total. Tony died. The third partner died. 1/6 share wala died. And the remaining partners will continue at 3:2. 3:2:1. Now 3:2. So sacrifice ratio is same as the OPSR. Partners allowed interest at 10% on their capitals, but no interest on drawings. The assets, land and building to be revalued, machinery to be depreciated, furniture to be depreciated, inventory to be revalued. Trade receivable is good, no provision is required, so that's an income. What is the amount due to the executor is important, so that is paid immediately. They want a revaluation account and partners capital account. We'll start calculating the goodwill. How do we calculate the goodwill? Goodwill is to be taken at 3 years purchase of the average of 4 years. So I took the 4 years profit, found the average profit is 1,04,400. Okay. Interest on capital to be taken at the average capital balance of 3,50,35,000. Therefore, average profit before interest on capital, after interest on capital becomes 69,400. Goodwill is 3 years purchase, 68,200. Okay, this is 3 years purchase. And Tony has got 1/6 of this as goodwill, 34,700. What about the share of profit? Average profit is 1,04,400 for 2 months. He was alive till what date? Tony died on, that is important for us. He died on 31st of May. So for 2 months, I need to find out the profit. Okay? So 2 months is so much and his share is 2,900. So the revaluation account. Plant and machinery depreciation. Furniture and fixtures. Debit side first. Furniture and fixtures. On the credit side, increase in land and building, increase in inventories, and the provision for debts no longer required. Therefore, you get a profit of 49,250, which I have shared in 3:2:1. Okay? Then I open the capital accounts of the continuing partners first. You can do it together also. Balance, revaluation, general reserve, joint life policy. Joint life policy in the balance sheet is at 40,000. They got 2 lakhs. So 1,60,000 was shared. Okay. So as far as the deceased partner's capital is concerned, his opening capital was 1,20,000. The revaluation share of profit is 8,208. Goodwill, he has to be credited with 34,700. The other partners were debited there. Here. Okay? So, goodwill. The share of profit till the date of death. General reserve share. And joint life policy 1,40,000 into 1/6. Okay? So, this is how you prepare. And he is paid off. Too bad. Immediately executor is paid off so much. Only so much, 10 marks were supposed to be given. Not a difficult question. Would have been possible. Just keep your cool and work it to the end. Okay? Let's go on to the next question, which was again a final accounts question. Final accounts, they want trading and profit loss and a balance sheet. Carriage inward, trading account, stock, opening stock, trading account, carried outward, P&L, returns inwards, reduced from sales in the trading account, purchases, less return outward, trading account, salaries, rent will go to the P&L account. On that side, interest received credit to the P&L, sales, credit, less sales returns, discount received, credit in the P&L, capital balance sheet, term loan balance sheet, creditors balance sheet. Interest on term loan, 51,000. Now, we are told there is one adjustment here. The term loan was borrowed on 1st May. That means you have borrowed it for 11 months. Okay. So for 11 months, what is the interest that needs to be found out? The total loan for 11 months, interest would be 55,000. How? 6 lakh into 10% is 60,000 for the full year. Okay. For 11 months it is 55, but we have paid only 51. Therefore, 4,000 is outstanding. So to the P&L, you have to take 60,000 into 10% for 11 months. That was the adjustment required. Nowhere else are adjustments required. Everything else is fine. Goods lost by fire. A simple one. Credit the trading account or reduce from purchases 40,000. In the P&L, 40,000 less insurance claims 20,000. You will get that. And the third adjustment was for audit fees. 15 was paid only for half year. Another 15 for another half year. So 30,000. Show audit fees as outstanding expense. That is all. Then depreciation, furniture, delivery van and computers, which is straightforward. So the balance sheet also would be Simple and straightforward. 10-mark question. Definitely worth 15, but that considering the time, keep cool, keep going. Okay. Question number 5. This was the challenging question in the entire paper, but it was worth only 5 marks. There was a choice. Okay. Either you take this or you take the BRS. I would have gone for BRS, but let's look at this. Okay. P&L account of Prabhakar showed a net profit of 15 lakh. After considering the closing inventory of 9,37,500 on 31st of March. On the scrutiny, it was observed as under. Purchases for the year included 37,500 paid for electrical fittings. Now, let us look at it like this. Does it affect my P&L and does it affect my stock? Okay. P&L definitely will go up by 37,500. Stock, it doesn't make any difference. Okay. For stock, it doesn't make any difference. Next. Goods of the value of 1 lakh were given away as free samples. So, from purchases, I have to reduce 1 lakh. From say, again I debit advertisement expenses. So, it is nil effect in the P&L and nil effect for my stock also. Are you following? Look, when you give goods to your customers, free samples, what do? You have to reduce from purchase. Okay, so it increases my GP. Then you have to show it as advertisement. So it reduces my NP. So ultimate effect of the profit is nil. Invoices of 6,25,000 but goods were not included. Therefore, what I have to do, it will affect both the places. Stock is going up and the profit therefore also will go up. Okay. Then goods of 5 lakh have been sold and delivered, but the sales was taken in April. So this is a profit for this period. But does it affect my stock? No, because the stock valuation was made on 31st of March. Okay. Goods costing 1,87,500 were recorded as sale. 33 1/3 on cost. So 33 1/3 of 187,500 I have included in my profit. I have to remove that, which would be 187,500 divided by 3. 187,500 divided by 3 is 62,500. Whereas here, the cost of the goods must be included in my stock because the goods belong to me. Okay? When you do these adjustments, you will get this working out. Profit, this will increase. Goods given as charity, no effect. Goods in transit, sales taken in April wrongly has to be reduced. Okay? Therefore, I will get 11,62,000 minus the profit I made on sale or return basis wrongly. It is profit for the next period. Therefore, 26 lakh is my correct profit. Whereas stock, I have to add that 6,25,000 goods in transit and also add the stock line with my sale or return customers. My stock position will go up to 17,50,000. 5-mark question. Please go through this solution. You will understand the concept properly. Okay? And the option for here was a BRS, and I would have gone for BRS. But the BRS required an amended cash book and then a statement of reconciliation. So, first I prepared the amended cash book. The cash book balance was given. There was a term deposit which matured and not recorded in the cash book. I recorded that. There was a bills receivable discounted which was not recorded. I recorded that. Bank charges not recorded. I recorded that. Trade subscriptions paid by the bank. I recorded that. A creditor's check was written less amount in the cash book. I corrected that rectification. And a bills payable was paid, not recorded in the cash book. I recorded that. So after doing these adjustments, we get a balance carried down as 3882,500. That should be reconciled with the balance as per passbook. Now only three things can come when you reconcile an amended cash book with the bank balance as per passbook. Checks issued but not cleared, checks deposited but not cleared, and mistakes by the bank. In this question, there are no mistakes by the bank. So straight away, add checks issued but not cleared, less checks deposited but not cleared. Simple question for 5 marks. Really worth it. You would have easily done it within 5-7 minutes. Right? Then came another simple question of 5 marks of NPO. They wanted you to prepare the income and expenditure account. Okay? Opening balance is given. Subscriptions, donations, raised for meeting revenue means it goes to income expenditure. Interest on investments at 9%, 27,000. Health checkup camp collections. Payment for medical supply, honorarium to doctors, salaries, medical expenses, employment, equipment purchase, health checkup expenses. And then additional information. Okay. So what you have to do here is, these working notes are important. First of all, subscriptions. What relates to this year should be added. What does not relate to this year should be reduced. So subscriptions received, add outstanding of current year, add received in advance in the previous year, because both relate to this year. Less outstanding of last year, less received in advance in the current year. Reduce, you will get your subscriptions. Add what relates to this year and less what does not relate to this year. Equipment, the opening balance is given as 63,000. Additions were shown at 45,000, but the closing balance was given 90,000. The difference has to be taken as depreciation. Then, about the medicines. Medicines purchased, how do I calculate? The closing balance due is 39,000 to the creditors. I have made payments of 90,000 and the opening balance was 27. Therefore, total purchases for the period is 1,02,000. What comes to the income and expenditure is the amount consumed. Purchase, opening stock plus purchase minus closing stock. So 87,000 should come to your income and expenditure account. Based on these calculations, I prepared the income and expenditure account. Medicines consumed, honorarium to doctors, salaries, business expenses, depreciation, credit side subscriptions, donations, interest on investments, health checkup collection, less expenses. Surplus is 30,600. Work question. Marks will be less, but it's okay. Then came another full-fledged question, which had from company accounts, which had rights shares, bonus, and redemption of debentures. Okay? They said pass necessary entries. Existing shareholders were given the option to purchase 2 shares of 10 each for every 5 shares held at 15 per share. To issue 1 bonus share at 6 per share for every 6 held. To repay the debentures at 10% and the investments were sold at par. Journal entries. Okay, karenge na. First we'll talk about the right shares. How many shares were there in the company? The paid up shares were 30,000. 2 for every 5. That means 12,000 shares were issued at 15 each. So bank account debtor, 2 share application, 1,80,000. Share application, 2 share capital, 2 securities premium, 120 and 60,000. Application money received for 12,000 shares at 15 per share. Bonus. From the P&L, there is no other account available. But 1 share for every 6 held. How will I get that? Now, look. There were 30,000 shares. Plus 6,000 were issued. Therefore, 42,000. Now, 42,000, one bonus share for every 6 held. So, 7,000 bonus shares. Okay. One share for every 42,000 shares. Okay. So, from one bonus share for every 6 held. So, the bonus is going to be 70,000. That is 7,000 shares at 10 each. So 70,000 will be given as bonus shares. Okay. Then we sold the investments for debenture redemption. Debentures of 70 are going to be redeemed at a premium of 7,000. So debenture holders to bank 77,000. And then debenture redemption reserve is transferred to general reserve 7,000. Finally, the last question 6A was for issue of shares. A 10 rupee share issued at 12 rupees. So 2 plus 4 plus 6. Applications were received for 7 lakh. Issued 2 lakh 50. Applications received 7 lakh. Letters of regret were sent to applicants of 30,000. Okay. So how do I adjust this? And there are 3 parts there. Okay. 3 types of allotment given. So let's first do this. Okay. This is important. Okay. It's a working note that has to be made. So I will say statement showing calculation of adjustment of excess application money. Okay. Now, I'll make a few columns. I'll explain what are these columns for. Okay, this is particulars. This is applied. This is transfer to capital, share capital. This is adjusted to allotment, and this is refunded. Now, I know for sure that the number of shares applied is 7 lakh. Okay? We are told that the number of shares applied is for 7 lakh. Number of shares issued is 2 lakh 50. So, the total of this applied should be 7 lakh into 2. Application money is 14 lakh. And I can issue only 2 lakh 50 into 2, 5 lakh. Therefore, the excess application money is 9,000. Okay? Take it slowly, you'll get it. Now let's follow the rules that they have done. Excess application money of 30,000 shares were rejected. Letters of regret were sent. So, rejected. How much did they pay you? They paid you 60,000. You didn't give them any share, no adjustments. So you have refunded the entire amount with 60,000. Okay? Now those categories. 70 got 70. This is A group. 70,000 who paid you 1,40,000, you gave them 70,000 shares of 1,40,000. No adjustment, no refund. Okay. Then came the next group, the B group. B group 2 lakh got 1 lakh. So, B group. They applied for 2 lakh into 2. They applied for 4 lakh. What did you do? You gave them 1 lakh shares. 2 lakh. So, what is extra here? 2 lakh was adjusted. Nothing is refunded. Then comes the D group, C group. C group, they applied for 4 lakh. You give them 80,000. So, they gave you 4 lakh into 2, 8 lakh. What did you give them? You gave them 80,000 into 2, 1,60,000. How much are they supposed to pay for allotment? 80,000 into, what was the allotment due per share? 4 per share. They were supposed to pay 4 per share. That is 3,20,000. Now the extra money. 8 lakh minus 1,60,000 minus 3,20,000. You are going to refund. This minus this equals to this. Now the total here is 5,20,000. The total here is 3,80,000. So my first entry would be bank account letter to share application account letter to share capital, to share allotment to bank. That's how I prepared the journal entries. To share application account letter, to share capital, to share allotment to bank. That's my working note and this is my journal entry. Then allotment money is due 10 lakh, 2 rupees for capital, 2 rupees for premium. We have already got 5,20,000, so we will get only 4,80,000. How is this? 10 lakh minus 5,20,000 adjusted will give you 4,80,000. This 5,20,000 adjusted. Okay? First call and final call, 15 lakh. 2,15,000 to 6. But there is one shareholder holding 1,000 shares. Okay? So he will not pay 6,000. One shareholder holding 1,000 shares are given in the narration 249 into 6, 14,94,000. His shares are forfeited. 1,000 shares of 10 each are forfeited. First and final call, 6,000 was due from them and 4,000 is forfeited. Okay. Applied for 5,000 shares. Allotted 80,000 divided by 3,20,000 into 80,000 for 4 lakh. Sorry, not 3,20,000, 4 lakh. 80,000, 4 lakh. See, 4 lakh. You have given 1/5. Therefore, 1,000 shares were allotted. That's the only catch in the question. Now you are forfeiting those 1,000 shares. Then you are the balance. The reissue loss is 1,000. Therefore, the profit on reissue goes to capital reserve. This 4,000 minus this 1,000, 3,000 goes to capital reserve. That was the simple question on issue of shares. And the last question for the entire paper was, what is a trial balance? And even if the trial balance agrees, some errors may remain. Silly question. 11th standard students should have got this question. They will answer it. Okay. So I gave you what is the trial balance, theory part. It is a statement prepared to establish the arithmetical accuracy of books of accounts. When will there be a trial balance agreement even if there is a mistake? Two kinds of mistake, error of omission and compensating errors, which is theory part. I want you to read it and understand. Learn this. Find out the faster way of solving with the cool mind. The only trick that works is practice, 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 practice and practice.